Yeah. Good day. Good morning. Good morning. Or good afternoon. This is okay. We are still in New York session. Good afternoon. I just want to likely share it with you. We missed this around 4 a.m. in the night. It happened in one of the biggest news. BOJ is a Bank of Japan released the interest rate. This interest rate at 4 a.m. Nigerian time. That's GMT plus one. So this is pounds Japanese yen. But then before then, what do you think about there's no need for you to bother yourself about me saying this over and over again. If you go to my forum, I make these campaigns. You don't need to bother about the news. You don't need to be shaking about the news. Once you know what you are doing, you know the price, the language of price action. You know because it is entirely about price manipulation. The market is entirely about price manipulation. Don't doubt it. If you doubt it, well, I don't know which way you want to go. That the game is entirely about price or manipulation. Yeah. So if you hear from most of the legend in the industry, hear the same thing from them. It has been established. There's no doubt about that. It has been established. Yeah, it has been established. From this is one of the technical analysts in US. So he's a legend himself. So think about this. All the financial theories and all the fundamental analysis in the world will never be any better than what the trend of the market will allow. So that means if you pay attention to your chart, you pay attention to your price information, yeah, you get rid of the news. Yeah, because whether you like it or not, price action, discount the news. Yeah, it's a mechanism that discounts the news. So that is coming from one of the distinct. Then hear this again from Richard, one of my mentor, Wyckoff, Richard Wyckoff. Yeah. So he dubbed the market makers as a composite man. That if you don't know what they are doing, I bet you think twice. So all the fluctuation in the market and in all the various stocks should be studied as if they were the result of one man's operation. Let us call him the composite man, who in theory sits behind the schemes and manipulates the stocks to your advantage if you do not understand the game as he plays it. If you don't understand the game as he plays it, as he moves the market up and down, move it against you, wow, send you back to the village. And to your great profit if you do understand it. So if you mastered price action very well, it's your advantage. Yeah, you can swim. You can swim with the sharks without being hot. Without being hot, you can swim with the sharks. Yeah, you can just take. And Wyckoff does to try to play the market game as the composite might play it. In fact, he even claimed that it doesn't matter if market moves are real or artificial. That is the result of actual buying and selling by the public and bona fide investors, or artificial buying and selling by ledger operators. That is a quote from one of his books, The Method of Trading and Investing in Stocks. You can get the book on the internet, just Google it. Yeah, so that is the concept. This is the concept that brought me to this is a quote that brought me to the concept of AMD, and since then, since I got this to know about this, and I really understand the in-depth of this market price manipulation. I'm telling you, I rarely make a kind of a decision. Yeah. So accumulation is just accumulation of assets during the price range. It happens all the ranges of the price, usually the Asian period. Like what you're going to see in the news. Then M is manipulation of prices, low and highs. What is the business of the market makers? They're busy doing the market is to take out those stop losses that we place above the highs and below the lows of the market. That's their business. They take them off and move the market in the opposite. So manipulating prices, then they distribute the profits in the opposite. So get that behind your mind. Then we move to we got to see the news. What comes out of the news? What comes out of the news? So comes out of the news of Bank of England. Bank of Japanese. Yeah, this is forex factory. My favorite news source. Forex factory. You can see here, Thursday, April 28th, at exactly 4:11 a.m. The currency to affect is Japanese yen. Also, all Japanese yen pairs will be moved. AUD Japanese yen, pounds Japanese yen, euro Japanese yen, Swiss franc Japanese yen, euro Japan. I mentioned euro, USD Japanese yen moved so much. All of them, you see that they move so much. It's a night news. Don't need the night. If your news is released, my brother, especially these Asian and New Zealand, Australia, they happened in the night. The major news happened in the night. Yeah. Now what if you want to see to guide use the news as a guide, but not trade the charts. You can use the news as a guide. Yeah, the Bank of Japan has put their previously the interest rate of Japan was always negative. Yeah, negative 0.10%. Yeah, the forecast came out as said that Japan would still leave the interest rate unchanged at that negative value, and it came up as been predicted. You can imagine the actual. This is the actual. So this is the focus where the people are waiting for. That's the focus. That's the focus. It came out as rightly been predicted. Rightly been predicted. Yeah. Now, what happened? What happened before then? I think we'll be before then. Before then, I put up a setup in my forum. My forum, price action forum. I put up a setup, a trade setup on my forum on the 25th of one of my daddies in the Lord, who happens to be other in my price action group. Yeah, is one of my respected, favorite. So I so much cherish him for you to see that kind of personality in the market. Because a lot of misconception around this business. That's a scam, because Christian cannot do it. But to some of us, it's real. Yeah, we discard the misconceptions. So he asked me on Sunday, Monday daybreak in the morning, in the early hours of Monday, on the 25th of April. Yeah, this is my forum, price action forum, 25th. You can see on April 25th. He asked me, and I told him pounds Japanese yen will rally upward and then move down. why I gave him that that setup, and I put up the setup in my forum to see why I gave it, because of what? Because of price action I saw here. Yeah, before now, this was the price action on pound Japanese yen. So to most of you that don't really believe in confluences or deep, that you have to vary your analysis on different things. Well, I don't know, but to me, it's an edge. If you have a varied knowledge on different technical facts of the market, it helps a lot. It helps a lot. You have to be very, very deep. You have to be very deep, because this market is deep, highly liquid, and you can imagine a market of over $6 trillion changing hands every day. So it needs your depth. Yeah. Your depth will be the function of your breakthroughs. Yeah. If you watch carefully without any of this I took up my Elliott wave and so this is wave 1, wave 2 in correction, then wave 3, wave 4 in correction, then wave 5 will come down to this place, and I saw it that this place was a demand. Yeah, this is a demand, or this and that. Then probably likely go to rise up to this level, because here, once it comes down, it will cycle out that Elliott wave pattern or phase, and then to continue the new wave. Yeah. So I quickly, gave him that analysis, and I posted it on my forum here. Then with the AMD pattern, the liquidity inducement of AMD, you can see my listing here. This is the formula: S plus BMS plus RTO came down. Then here we have a equal lows here. As equal lows was taken out, then we have our stop hunt was taken out. That is, the stops of these lows were taken out, and we have our stop hunt here. After stop hunt, what we are looking for is BMS. Got BMS here, So that was make me believe that this thing will come down here. Because of what? Because we already have a BMS here. So once we have a BMS, this place has been taken out. The liquidity of this high has been taken out. A price will come into this demand. Now I told you that there must be a liquidity or in that platform that will make price to move down. So that means looking at this place to take out again, then going to balance off this liquidity void. Yeah, this gap here. Then so price will move off into this equilibrium to make an efficient price. Then come down again, to distribute profits into this equilibrium, then move back upward, back and forth. That's how it happens. So that is the trade setup I gave on early hours of on Monday, 25th of April. Brother, that's so down. Furthermore, that day I continue to give people on my forum about the scope on the Japanese yen. Yeah. So AMD pattern really helped. It helped. I'm telling you, it helped. So pounds Canadian dollar, this pounds Canadian dollar. So we'll go straight to the news. So I just want to yeah. So I give one hour of it. This is 1 hour. Oh, sorry. Euro Japanese yen too. So I gave it as it will go up, then start downwards, which is what it's doing right now. Yeah. So that is knowledge of price action. Then this is 1 hour of pounds Japanese yen. 1 hour of it. See it? Yeah. So it will fill up. Once this liquidity void is filled up, it will bounce upward, then which is what it did. They break, of the news. Yeah. This is what happened. This is what happened daybreak of today. You'll go there and you see it yourself. See it yourself. Yeah. So that is how I gave that the setup and God who made me. It has been so good. Yeah, it has been so good. Can imagine. So we have 293 pips in the news. We get there, we get there, we get there, we get there, we get there. So let's go straight there and see. So this is it. So this is it. Let me check for 4 hours of that news. So this is the 4 hours that I gave, that I told you about. Yeah, I gave that about. And on the forum, can imagine it has been filled up and it's now trying to return back down. Then it has been filled up. Just try to almost about it's coming down right now, as we predicted. Almost about 174 pips has been moved downward after the news. Yeah, after the news gave 293 into that are projected. This is the imbalance we gave. That if you touch, take out the imbalance. I mean, get to imbalance, then the distance, right? So we go straight and see how you can position yourself ahead of the news. If you have the foreign knowledge before the news come in, you must have used your AMD pattern in place. You must have set it up in place. Price manipulates up and down. This is accumulation area. The highs was taken out, then coming down to take out the low by distributing the profit after the SH, the manipulation here. That's a stop hunt. Yeah. So after the stop hunt, process. So this is what follows is distribution of profit down. Then we have another this here. The low was taken out here. Then that's a range there. There's a range here. Can you see the range? So that's the range. Then the low was taken out. Then we have our another at the bottom of it. We have that stop on this manipulation area. Then price will distribute profit into the opposite. So that means before the news, we are expecting that pounds will rally against Japanese yen. Whether the news come as negative as expected, or so we still believe it's under probability. So we just projected that okay, price will likely distribute the profit, because right now the structure is that there's a change of character. Right now there's a change of character. I mean, though it was ranging, we all feel that if this place is broken upward, right? If this place is broken upward, this is a supply flip zone, then it will retest it, then move forward. That is the structure on ground. And news came in exactly as we did it, and it moved like that, and it falls into place. It falls into place. So let's go to see how you can do that. How you can do that. How you can do that without getting hot. You can always swim with the sharks without getting hot. I'll tell you. So let's take out all these first. Take out all these. So this is the all this area are gaps that will be filled up. Price is still coming upward. Still coming upward. After that, down. But it's coming to fill up this gap now. Then after this place, we fill up, then to move to that. So yeah, that is what I'm foreseeing. right? So let's, we told you that this is going to be the profit this in area. Now, if you switch this, to before the news, let's take out let's say we never got to this place. Let's say we never got to this place. Yeah. So let me take out that place. So I will play back. So if we never get to this place, so you quickly go back, we will go to 15 minutes. I love 15 minutes, but you see the zigzag, the retest, which is what we are looking for. The retest, you see it in lower time frames. Yeah. So this is 15 minutes. It's 50, you can see the 15 minutes. See the 15-minute charts. So you can see this is the distance of this place was taken out here. Under this distribution phase, because pounds Japanese yen was already in distribution phase before the news, prior to this place. So we predicted that the distance is moving into, it's already in distribution phase of AMD. This is the distribution phase of AMD, which we predicted under that 1 hour. Under that 1 hour. So that means here right now has given us the change of character from bearish market into this thing. Why? Because here has been taken out. Then we have here could not come down below this place. So that is a new higher high, higher low, higher high, higher low, higher high, higher low. You understand? So that is how to confirm a shift in trend, a change of character, or what you call it. So price usually take out the high, come back into it. You can see this is the demand zone, forced into that demand zone. Demand zone was created there. Then price moved to break the previous high, fall back into that demand zone. You have your buy in place. Then this is a liquidity inducement. Price take this lows out, was taken out with this present one, makes it a double what? A double low, equal lows. And see that's equal lows. So that's how to interpret, how to move with the trend. Yeah. As they are manipulating it, you are interpreting it with your own language. Using your AMD liquidity inducement, equal lows, then price move higher to take up this equal lows, move it down, take up that equal low, fall into this demand zone or other blocks, fall into this place, then take it higher to move the entirety of this place out. Yeah, so to move the entirety of this place out, and what happened? It was compressing. We already have a compressing because we are expecting, the market is expecting what a volatile news. So the market makers has left the market right now. They are waiting for that volatile news to happen, right? And before the volatile news, the differences is that the market momentum is shifting upward. Is shifting upward because whether you like it or not, they must have known. They got to know the outcome. They make the price, of course. So news must fall into place. They will call the market into their favor, into their own favor. Yeah. So if you mark your this thing very well, you see that this is a compression. A compression. The title of this place is compression. This place compression, which is what we call the flag. This is impulse, the compression. So we are looking for a break. Once we get a break out here, we look for what? We look for a retest to it. That is that. I'm telling you. You don't need one indicator just get yourself prepared, shift your, if you were trading from here, you were already buying from all these demand, and then you just be shifting your stop losses to a break-even point so that you can lock up your distance to minimize your risk and, you know, awaiting the news. And news comes, it helps. Can imagine that. So when we get this flag, so it gave us confidence. You can see it. This is the flag, bullish flag, breaking up, upward it with this impulse candle. You see that impulse candle, then it takes out this high here. This high, this we call the trend line liquidity. Inducement price move up to clear out the boards here. All these highs were taken out. This is previous supply, right? Or previous resistance, what do you call it, resistance zone, being taken out. As we have a thing, this is what we call the supply demand flip zone. So we take that under our VIP course. Yeah, refined supply and demand. Supply and under the setup. You can use it as a continuation pattern to manage your trade. Like I told you, you know, we were buying from here after this, you know, after this BMS return to order. So we get our formula of AMD complete for a confirmation entry, right? If you were buying from here, you are just using all this one as what, as a continuation pattern to manage your trade. In case if you don't want to leave the market and you want to just see what will come out of the news and take advantage of, you know, favorable price movement of that news to get your this year. And we get this, and you can imagine, we get this, a price. Let me see, take this out. Let me see, take this out. Network is poor. Let's take this out. So we get this is so we're waiting, this supply turns demand. We are waiting for price to move higher, right? Waiting for price to move higher above. If we can get a price to move and close above all these trend line liquidity, there are liquidity, yes, there are liquidity here. All these areas you are seeing, all these highs, there are other placed there by these traders as you at so there are others here. There are others here, right? So just like this, when we have something like this, you know, something like this, like this, like this. So this become your flag. So as we have this move out, then it's coming back to it, then we shoot a shoot off. That's just what we are expecting there. Yeah. So you must be expectant of that. So now, if you want to do it right now, we want to just like take advantage of this flag. You know, if you still use your Fibonacci to checkmate your, if your this is, you use different this. I don't base my thing on only one point. I use different here. This is at a premium or discounted price. So it has broken below 50%. So we are in order. So you can rightly place move your stop loss, you know, around this place. But this is another as price coming to imbalance. This is another imbalance area. Yeah, this is another imbalance area. Another imbalance being created here. This is high, low. So the gap between here and this place creates an imbalance. This place. Yeah, a gap. The price move back into it, move back forth into it. So you can move your stop loss to this place. If you are trading from here, then you shoot it. I've been able to expose a lot of things to you here. So move it usually like that. And let's play forward. Get that? So we get our worth, we get our momentum candle taking out about 2 lows here. We're taking out, I mean 2 highs, 1, 2, we're taking out. So we are having our flag leg, the third leg of flag being going to be yeah, flag. So we've got that, this already, you stand. So you have that, and so once this place, this high is taken out, so this is this is a previous supply, right, or high or resistance, or whatever you want to name, you want to put, you call it. Supply is taken out there. We are expecting more. That means momentum is shifting toward the upside. Can you see that this low were strong lows because they take out the highs? They were a protected low, protected demand areas because they are responsible for the taking out of this high. So it's a protected area. So and the previous the subsequent highs, I mean the subsequent lows were moving higher than the previous one. So the momentum is shifting that. And if you see very carefully, you see that if you count a lot of this in here, if you count that, the number of candles we have there, if you count it, it's more than the impulse, right? It's more than the impulse, almost about to this place, to the end of that flag, we have almost about 31 bars. Then it took price to compress in about 31 bars, 7 hours, 45 minutes. You can imagine that. Then what does it take? How many this thing it takes to form this in there, the impulse? Just 5 bars and 1 hour, 15 minutes. So you can see that the momentum is on the buying side than selling. So all these are weakened. They are weakened their sellers. As price take out this way, they are weakened sellers. So price, the buyers are getting more upper hand than them. The buyers are getting upper hand than sellers there. Sellers. So those are the things you use. Those are the facts you use. You must be very, very deep. You must be very, very deep. You must be very, very deep. So as we get this right now, this is 1:30 a.m. GMT plus 1:30 a.m. You can see. So the entirety of this liquidity, trend line liquidity, is being taken out, right? To complete the leg of this flag. So you will not buy into this place. It's a foolish idea to buy into it because you are buying at the higher price. You wait for price to retest. Always wait for price. When you see a breakout of a particular highs or low, you wait for a retest. A retest is a confirmation. That's how the market makers think and act. Yeah, they think and act in terms of discount and premium. Sure, yeah. You must wait for it. So we quickly, as we get that, so you can see that this is a pin bar. If you watch carefully, you see that going back here, you see that this is a what? This is an imbalance. Price move out of this equilibrium. And in future, we have this if taking effect. So we have, wait for a second. I can take out my Fibonacci to see the level of this in there. To see the level of reaction there, pull back was 0.5, that is 50% of this move. And it was withdrawn, right? So that means this supply has been, this broken supply has been tested. It has turned to what? It has turned to demand. It has turned to demand at 50% of the move. You understand? We have that. Turn to demand, like exactly what happened here. Resistance broken above. We have flip zone. This is a flip zone. So it's a continuation pattern of managing your trade. One year pattern in our AMD course. Yeah, supply broken above. It turns to demand. It bounces off it. This is a demand. Can you see that? So please take out this supply. That's rally based rally. It comes to it. They're the same thing we have here. So it was taken out, then it turns to that, and tell you this is what time it does. That is 2:30. We are waiting for 4:11 a.m. That is the time of the news. Got that? This is 3 a.m. 3 a.m. 3 a.m. 3 a.m. That's 3 a.m. So we are already expecting price to respect this structure now, right? We're expecting price to respect this structure. This is a demand. This is a demand zone. These are from a demand zone. You know, it meets the rules. It meets all the rules of demand. Take out the market structure and we have a significant move above. Then, you know, it has not been tested. There is an imbalance. A price must come down to take out this imbalance here. Then bounces up. That is what we are expecting. That's what we are expecting. So can you see that? Got it tested second time. So that is a 315 or thereabouts. 330. 330. So 330, we have this engulfing pattern. At 330, we have this engulfing pattern. Wow. We have this engulfing pattern. What I'm going to do at 330, we have this engulfing pattern. 330, we have this engulfing pattern. Then which was be, you can move your distance to, you can see take it to like 1 minute or thereabouts. Take it to 1 minute, thereabouts. Wow. So under that 1 minute, we have this structure, we have this. This is taking out BMA, you know, your stop hunt. Oh God, oh la la, oh la la, oh la la, oh la la. AMD pattern coming into action here. You see it, stop hunt. After this equal loss taken out, stop hunt. Then after stop hunt, what happens? Price will start moving to the opposite to take out all these highs, right? We have a BMS followed by BMS, stop hunt followed by BMS, which is that is our formula, right? The AMD formula plus BMS plus RTO after inducement. So this will give us our confirmation entry. We are in 1 minute. You can see that we have managed this into that 1 minute, in that 1 minute, right? Now, if we take out your distance, if you take out your distance here, either from here to this, or from here to this place, see at 0.62, right? So what I'm going to do is that I will put my buy limit here, my buy limit. Put the buy limit there. Yeah. Well, this is a news. I will not use, just expect price. This is a BMS. We have around RCO, which happens at what level of this thing there? At 50% of the move, right? 50%. So you put a stop loss here. You know, you are waiting. Don't enter yet. You wait for the news. Put your stop loss here at 61.18. 61.18. I will just put my, you know, put your normal this, you know, your whatever, you know, this is your, just putting your stop loss, putting the stop loss, you know, then you wait. You want to strike, kick the buy stuff, right? That's what you do. You wait for the news to be released. This is how to trade the news. The best way to trade the news. You wait. Telling you that is 4. As this 4, we are going. That is almost about 4 o'clock, right? And once immediately we feel this will be taken out, then off. Then we'll get I see that. So it's moving higher. It's moving higher. It's moving higher. You see that? You see manipulations? See manipulations? So it must come down to take out this low first. Then it has created this equal high here. Take out this low, bounces off it. Take out this one, take out this one, take out this one. Then move higher again to clear the board of the rest highs. See it? At this thing here. So your 5 minutes to the news. See that? 5 minutes to the news. Oh la la. See, you see stuff. You see stuff. So just as God got your this thing here, he cleared this play out, has cleared this thing here, or more, no pity him at all. You you got to take a risk of how many this in there. Your risk level. Oh. I just measure this right. Yeah. So almost about 7 pips, 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 7 pips. Almost about 7 or thereabouts. If you want to be smarter enough, as this place cleared out, I will just, I usually it's touched down, put my stop my Fibonacci again to track this out, remove the higher one. We remove the higher one. We remove the next one. Remove the next one to see. You can see at 0.889. 0.89. You have to be very smart. So you can put the stop loss. You can manage the stop loss to put the stop loss around here. Let's say we never come to this place. Let's say we never got this, right? Imagine we never got this. We never got this. And your this thing is, let's say we never got this. Oh la la. It's water. There's something I want to show you this row, right? Yeah. Let's say we never. Internet is, man. Oh shit. Internet is poor. We never got this, right? Let me put this one off again. This is 130. So, and this is our this thing, right? Right? Yeah. This is our this thing, right? Yeah. We're predicting. So we have our supply turn to demand. Right? Once we get this, because we're waiting for news, we expect that price must move. So if you're already in the trade, wow, that gives you an edge. You're already settling, like just move your stop loss, move it. You can move it below here, because sometimes the price can still come down to touch this one. Yeah, so you can move the stop loss below here, or you use your Fibonacci. Use your Fibonacci to get the this there. So you can put your stop at validation point. So you expect this to be right. Touch it. it touched the support, as you are waiting for it to touch the support. And once you see another candle that, this is still a flag, new flag. After this thing is, you form another flag. Continue to use your this thing. So that's what. So if you're already in the trade, that's what I don't want to. That's what I don't want to have. Yeah, I just want to very fast to move up. So 1 minute, 1 minute, 1 minute, 1 minute. That's 1 minute that, and 1 minute that, and yeah. So I move my this thing. See the So I would rather move my. This is a 359. 359. Then we have a 402. So the low, this thing is touched. See it's touched. Put my your stand. So you can move your this. Let's measure the. What's about the 8? Almost about 8 or 9 or 9 pips. So you can put your stop loss here, because this is the stop for previous stop hunt. Return to order. Your stop loss is here. Then you are waiting for this to touch here. If you were in the before now, you must have moved your stop loss to this place to maintain, to close all the previous profits you must have made before now. You see, this is a new formula of AMD. So we are seeing under, you see under above the broken the broken supply, right? So we are waiting for. So this low has been cleared. So that is almost about put your stop loss at this level. This is a 161.62, 161.62, 161.62, 161. Sorry, 161.22, right? Hold on, yeah. Yeah. So 9. So you put your stop loss to this place. So there I will target my this. Depending on you are waiting for just a few minutes before 411 strike. Yeah, this is 404. So I got this. Can you see that? This is what? This is BMS. Come to this place. Then if you use your this thing again for this one, it will be 089. 089. So your stop loss here is still very, though it could be risky. It could be risky. There's almost about 2 pips. 2 pips. So you can trade it in different way like that. So that you wait, you put your stop loss in that box, and you wait for price to hit that 411 or 410 or 409. Just a few minutes of this, and then move to you drag it. Now this is 2 pip, 2 pip, right? So for your first this thing is here. Your first take profit is here. The first take profit is here. So at 89, my this thing is here. Now once this place is touched for 1 minute, immediately as this place was taken above, immediately see this engulfing here. and I saw a engulfing there, right? I saw an engulfing there. Engulfing. Yeah. So I'm having a flare that because this is a withdrawal of the DC, and this is an other block, right? Yeah, other block. And at both this in the gate, we have a at 0.50, that's 50% of that impulse. And you can imagine that is around what time there? That is 4:05. 4:05. You come down. If you hit yours, that is 2 pips, but see it, you still have more push upward, So because this place is disturbing this, right? Yeah. This is another intermediate order block or supply there. So we are at what 407, 408, 409. It doesn't wait for 411 to happen. It's hit. You see the big move. Yeah. So if you were coming before and you put your stop loss, I just absorb your stop loss, move your stop loss to this place. 9 pips on your distance. Move it to close the stop loss, and you can imagine how many pips it has moved there. How many pips it has moved there from that move? How many pips? Almost about almost about 37 pips or 35 or 36 pips there. That's moved. In that move, can you imagine? Took out the entirety of this thing. So if you watch it carefully, you see that this is stop hunt, BMS, then distribution of profit. That is it. You follow out the formula. Taking out of equal lows, taking out this equal low, 1, 2. Took those lows out, make a stop hunt or manipulation this thing here, then into the supply that was broken above. Can you see that? Then it gives me BMS here. This is my BMS here. Return back into this place. Can you see that? Return back to it. So I can equally use this as either they call it a KML or whatever. This is what another we call KML. KML. Yeah. So you can also use your trend line to guide yourself in connection with the trend line. QML at 0.89, 3 points there. QML in conjunction with a trend line a touch, 1, 2, 3. The third one touch light and a trend line, and you see the move. That's just the thing. So it meets the formula, right? That gives you an edge, and before you knew it, and continue to move higher. So you take it back to 15 minutes, and you're going to see how far it will go in a higher time frame. Yeah, how far it will go in a higher time frame. You can imagine that in a higher time frame, what is giving you there in a higher time frame. Almost about got almost about is that not 100 pips? Almost about 104 or thereabouts, 104 pips. Just at that move, exactly this thing. So as you just check the news and the news came up, you don't even, maybe you looked at the news and you saw that it's negative. You usually know that this is negative, right? Is a negative impact to Japanese yen. So they don't need a foreign fund. So pounds Japanese yen will continue to fall. So it will continue to fall. We are taking advantage of that, of that what AMD has given me before now, before the news is released. I take advantage of the knowledge of your this thing, manipulation action through AMD pattern to get your, you know, your this thing in order. So that's how to swim with the sharks without, you know. So come down, you know, after taking out those, you know, it hits the previous stuff here, and then before you nail it, and but there'll still be a pullback. You can use that pullback. You can see multiple pullbacks. After I take out, then you can use this pullback to get more this thing, right? You can use multiple pullback. You break this supply zone more supply zone is taken out and a retest to it. You can use that. Yeah. See, a retest to it here. Yeah. So a retest to it here. Yeah. So that's how you can use your DC to trade. So this is a flag limit or whatever. So it takes out that area. You can see it. So you use you can enter your new DC here, and you know, enter your new oh, shit. I wanted to do by. So you can enter your new this thing here. If you just came in and you see this retest, you wait for a retest. Don't just rush enter. You wait for a retest of it. Pull your stop loss, or if you as you enter here, as you have entered here right, bring your stop loss to protect your DC. But this will be retested. This is a long impulse, and as hit this supply level, there will be a retest. And again, this is a resistance breaking above. So there will be a retest. Just you can put just your stop loss, you know, to that place. Then probably enter a new trader. So you enter a new trader. But my internet is poor right now. It's poor. Oh. Nigeria. So that is that. You know, just continue to manage this. You are waiting for it to fire. So the previous one is still counting. It's counting while you use this as your new. So you are waiting for it here to be tested. Either here, this is another place you are looking up to. Yeah, either here. Okay, but I'm looking at this as another break here and come down. That's the imbalance there, right? So just set a new, you can set a new order like that, and see try to come down. See it into that. So hit your order, new order, hit. So that's how you have to be very careful, very careful. You understand? Because when this place is a risk entry, because it does not have a liquidity graph like this place, right? It does not have like this place. Yeah, like this place. Yeah. So you're waiting for. So we can imagine your new order has catch up with this, and you are. Meanwhile, this place you are extending your distance far up. So your first order is still taking almost about as this is almost about a 2 pips risk, then to get almost about a 300, 2 pips risk to get almost about a 290, 290, 290. Can you imagine that? 290. 2 pips. Calculate that in your distance. 290 divided by 2 pips, or that's, or let's even say you use it, that's 9 pips. That's 32 times 32. Yeah, so this is how to trade. You need to use your news must always fall into structure. If you get the structure right, you get the news right. So you can swim with the distance. So the rest ones were like that. Imagine them, AMD and bounces up. We'll come back next. We'll come back in the next video. So that we'll come back in the next video. God bless you. So,